they're always going to say the same thing. But if you're sitting there and you actually are thinking about buying a house, right? I mean, I would just think about doing something else with the money and keep renting. But if you really want to, do the analysis, then what you got to do is you got to look around at the houses that are available to buy and look around at the houses that are available to rent. And do the math. Do the math and figure out, what is it going to cost me? How much down payment do I have to make? If you can do it with no down payment, fine. If I have to put a down payment, figure out what you can earn if you just put that down payment money, bought something with a 5% dividend. Figure out the opportunity cost on the down payment. Figure out the taxes, the interest, the maintenance, the insurance, the mortgage, all the costs of buying, and then compare that to the rent. If you have to put up first and last, figure out what that down payment is, and look at what your rent is, and look at what's cheaper. What makes more sense. And if it's cheaper to rent, in fact, it needs to be a lot cheaper to buy before you would buy. Because the thing is, if you buy, you're stuck in that. What if something happens? I mean, what if circumstances change and you need to move? Now you're stuck. I mean, if you have to turn around and sell that house in the next few years, you could take a huge hit. You never have that problem. I mean, you might have to break a lease if you sign a year lease, but, you can look at what that penalty is. Chances are it's not as bad as having to sell a house and deal with a 6% mortgage commission. But, you can do those numbers. And if you look at a house that you're thinking about buying and, the guy is for sale and they're willing to sell it, they're selling it for $500,000, let's say. I don't know what your mortgage payments are. Let's say your mortgage payments would be $4,000 a month. I don't know. Before you buy it, just see if the guy will rent it to you for $3,000 a month or $2,500. Maybe he'll do it.
Yeah.
There's a lot of houses that are for sale, where people will rent them to you because, they figure, well, it's just going to sit here, I'll wait it out. And, in most cases, if you do the numbers, you're going to find it's cheaper to rent. And, plus, especially for people that might lose their jobs, a lot of people, they try to figure out, well, if I buy, I get a tax deduction. Well, that's true as long as you have a job. But what if in this recession you lose your job? Right? Then the tax deduction doesn't mean anything. Then you got to pay the full mortgage, as opposed to the rent. So in a weak economy, if you want to play it safe, don't count the tax deductions because you might lose your tax deduction because you might lose your job.
Now, your rental background, is that by choice, by investment choice? You figure you do exactly the same thing. You take that.
Well, what I pay in rent for my house, no way covers the mortgage on the property. Let alone, I've had several things go wrong. I had, a whole room, the dining room, the guy had to redo because the pipe burst. It froze in the bathroom, and I've had several major things go wrong just in the last 2 years I've lived here. I don't have to pay any of these things. Whenever there's a problem in the house, I call the landlord. I get all the use out of the thing. I mean, his property taxes, I would say that 4 months of my rent, 4 or 5 months probably just covers his property taxes, not even the mortgage payments or any of the other stuff that comes in. And, the money that I'm not throwing away on mortgages or throwing away on property taxes or maintenance, I'm investing that money. I'm making a much better return than throwing money away on a house. I mean, I've got to live somewhere, so I don't mind paying rent because I need to live someplace. Mm-hmm. But I'm living in that house and enjoying the benefits of that house. The guy that owns it is getting all the headaches. And, of course, the house is depreciating, the last few years anyway. And I'm not having to, deal with any of that depreciation.
So when the run-up occurred and over the last couple of years when the appreciation in real estate really went crazy, any of the clients that you were working with jump in and say, hey, Peter, I want to make some money real quick in this. Let's get in and get out?
I talked to people that were flipping houses. I mean, I would have conversations with people, and what are you doing? Well, I'm doing this. I'm buying this condo. I'm buying, I talked to these people, and I tried to, convince them not to do it. And there were some people who talked to me who were ready to buy something, as an investment and ended up not doing it because I talked some sense into them. But, for a while, the people who were buying houses thought that they had made money because on paper the real estate was still appreciating. But it was all nonsense. I mean, I had the same conversations with clients in the late 1990s about tech stocks and internet stocks, where I was telling them to dump these things, and they were telling me that I was a fool. And for a while, they're the ones that looked right because the stocks I was telling them to sell kept going up. But in the final analysis, they all collapsed, and very few people who ignored my advice ever got out. And, they ended up losing whatever they thought they made. And that's the same thing that's going to happen for people who were paper millionaires in homes, people who thought they had all this home equity, they're going to find out that all they have is a bunch of mortgages.
Now, here's something we down here, especially in South Florida, where we get a lot. The Europeans, because of the fluctuation in the currency conversion, especially up in Great Britain and some of those states over that way, they're buying in here in South Florida because they feel it's a great deal.
Well, great deal. Why? I mean, compared to what?
because of the conversion rate, and a lot of realtors are selling.
Oh
them
yeah,
on that.
you've got a lot of foreigners who think that these are speculators coming in from abroad. They think they're getting a good deal, but you know what? They're not. I mean, they don't know. I mean, what's going to happen is the dollar's going to fall even more, and then they're going to see. Well, wait a minute. They're going to realize the dollar's going to keep falling, and why do they want to own these houses? I mean, Florida, and there's so many new properties, especially in like the Miami area. There's so much new construction that was started a year or two ago that I mean, it's amazing how much property is coming on the market. Prices are going to be so cheap down there. And why do these Europeans, eventually a year from now, all the Europeans who snapped up these houses are going to put them right back on the market and try to get rid of them because they're going to realize they don't need them. How much time do they spend in Miami? And if they want to go to Miami, there's plenty of great hotels right on the beach. Why do they need to own a condo? They don't. They're taking a punt on these things. They're going to turn around. They're going to sell them, and it's going to be a bloodbath.
Well, Peter, one last question before we let you go. The overall economy looks like it is improving with the price of oil going down and the dollar starting to go up. Do you see that continuing?
No, this is just short-term market noise. There's a lot of hedge funds, a lot of speculative money that's unwinding some of these positions here. The oil price drop is just another drop in an ongoing bull market for oil. And again, it's the main cause of that is weakness in currencies around the world, especially the dollar. So, inflation is going to keep getting worse. You're going to see higher oil prices. The dollar is going to turn. This is a head fake rally for the dollar. I think it's going to go a lot lower. I'm continuing to give the same investment advice I've been giving to clients for years, which is avoiding U.S. assets, avoid the dollar, stay in commodities, stay in precious metals, stay in foreign stocks. People should read. You mentioned my book, Crash Proof: How to Profit from the Coming Economic Collapse. That collapse is here, but I think there's still opportunity to profit or to avoid losses, which is probably even more important. So people should pick up that book or visit my website at www.europac.net and learn more about what they can do to protect themselves.
Peter, I want to thank you again for taking the time out of your schedule and joining us on the program today.
Thanks for having me.
All right, hold on just a second. We'll get Lindsay to take you out. Everybody, that's Peter Schiff. And again, that website is www.europac.net. Go there and check out his book, of course, Crash Proof: How to Profit from the Coming Economic Collapse.
Ouch.
Gary, we're going to do a review, but we're going to take a break right now. Everybody stay tuned. We'll be back in a few.